Okay, let's take a look at the stock market technical analysis. I'll start off with the tech stocks. I want to look at some commodity stuff, and yeah, we'll wrap up. Won't be too long. If you're finding value, drop me a thumbs up. I do appreciate it. Just takes a second to hit that thumbs up button, and it does help the channel, so thank you. And then if you're interested in getting additional trades, additional charts, additional market trade setups, private member group, link in the description below of this video. $5 a month, cancel anytime. Check it out if you're interested. Okay, triple Qs. So we're looking at a daily chart here. This is obviously our tech sector ETF. We did just recently, last week, kind of put in a slightly new higher high on the weekly chart, but on the daily it pretty much closed like double top. You can see closing there and then close there. Today popping above there and selling off, getting rejected so far. So we're back below that former high. But you know, we'll see. I don't see any like definitive sell signals on the daily chart right now. We do have negative divergence. It remains, all right? And the fact that, I mean, I get a lot of people talk about how I've been talking about negative divergence forever. Divergence is not a sell signal. It just is a condition, and it has been building. If you look at the RSI and the PPO, it's ultimately been building for quite a while, basically since, I mean, like this was a divergent high and then all these new highs. So we've had that condition since about July of 2024, and it has remained. So that divergence hasn't been taken out, and that's why it tells me that we're likely going to start the next trend leg lower when we start to get some additional sell signals. If we don't get those sell signals and we keep going higher, we'll burn through the divergence. It won't remain anymore. And then at that point, there wouldn't be any real bearish case to be made because you don't have that divergence. But that hasn't happened. So we just, essentially I just try to trade what I see in the charts, and that is what I see right now. I see last week and basically today, a new divergent high. All right, there's your negative divergence, and we have a new high that will likely get sold into. So again, I don't want to be long here on a new divergent high because you're likely going to get sold into. I'd rather be looking at shorting resistance, but I don't have a definitive sell signal yet on the daily chart. So I'm kind of holding off on that, waiting to see. If I flip over to the weekly on triple Qs, this is what happened last week. We had a bearish engulfing here, and that was taken out. All right, on the weekly, they closed above the body of that candle. So I think that's still, I think that's been negated at this point. We need to see some additional sell signals. Otherwise, we can keep going up. All right. One possibility on the weekly, you've got this big bearish rising wedge. You break down, you might want to pop up and do a back test of that wedge up there. And that would probably be up around, if it happened this week, we'd have a probably pretty strong rally. We'd be up around 555 on triple Qs. That would be an objective area to short up there. All right, so that's what I see on the weekly chart. If I drop down to the hourly, we do have a short-term sell signal, I think. We have, you can see this little uptrend on the hourly, and we do have a bearish engulfing candle right there on the hourly. So I can see some downside showing up, maybe down to about this 532-ish. But that's about it. That's all I really see. Individual stocks, let me just kind of go through those. Let me go back to the daily chart. We'll start with Amazon selling off. Again, I talked about this channel and how these new highs right here were divergent highs. Look, there's your negative divergence. See it? The momentum's moving lower. There's your highs, and they're selling into it. All right, so that's the point. Divergent highs have a high probability of getting sold into, and sure enough, they did. So I think that you go down to this support down here, and then I've got that trend line marked out. And there's no definitive sell signals really. You're still in an upward channel, so you got support right down there. Meta, this has actually a sell signal today. I did point this out earlier this morning to the private member group. You've got a bearish engulfing candle now. So again, I talked about this having this bearish rising wedge, and it looked like an overshoot. Today, pretty impulsive sell action. So this is telling me that we're heading lower. We're going to head back down to this wedge area, and then the bulls will probably try to fight to hold that. And then if that fails, then again, the projected target of the wedge, the widest part of the wedge, would be at the point of the break of the wedge. It would, be quite a bit more downside. So it looks, again, it continues to look like all this price action up here is stop rate price action. It is, meant to shake the shorts out of their positions. And it's done that. I think it's accomplished that. It's been up here for a month or so, or maybe not quite a month, but it's been up here since almost 2-3 weeks, and so it's done that. Now this thing can sell off, and it can sell off impulsively. So big bearish engulfing candle. Treat that as the top until proven otherwise. I think you're right there. Top of the market sitting at 736.92. A daily close above that would negate that as the top. Otherwise, treat that as the top, and you've got a really good risk-reward ratio for more downside there. Okay, Microsoft. I don't see anything really, no real change right now. We have a big sideways trading range, and Microsoft is essentially going nowhere. I mean, we've been trading in this range. We've been for, over a year now. Microsoft's, it goes up, but it also goes down, and it's not trending anywhere. It's just chopping sideways. So big sideways trading range. You take out the bottom of the range. The bottom of the range, you should head lower. Otherwise, we're range bound. Apple at resistance now, which is about 245.56. We're kind of sitting there, so no real change from Friday of last week. Google kind of breaking this support, but it's not impulsive. I suspect they're going to hold it. So you can see here you've got support right there. Looks like we're getting another reaction. So it's not a sell signal. I see it as non-impulsive selling today, and they're probably going to hold this. More downside, you really have to take out 181.62. If you take that out, yeah, you can head lower, but otherwise, this is at support. So you could buy it if you're a bull, and you could buy it from another rally up. That's completely possible. Tesla sitting at resistance. This is no change really from Friday, but it's at resistance, just slightly below it, right there at 360.84ish, somewhere right in there. So I do think we're going to get rejected here and head down lower, head down to about 302-ish, somewhere right in there. NVIDIA filled the gap that it made on the DeepSeek. This is the DeepSeek gap right here. So it came back and filled that gap. So it can sell off now. It can reject. There should be a wave of sellers here. We'll see, though. What I would be looking for, you look at the hourly chart. We're walking up this uptrend right here on the hourly, and that needs to go. All right, when we break that, we can start to sell off. Otherwise, they can continue to push this thing higher. And once again, the market and triple Qs is not going to sell off until you see NVIDIA really start to break down. I think NVIDIA is going to be one of the major reasons why the stock market starts to sell off. But until that happens, this is where the heavily positioned, you have a lot of people heavily positioned here. And so we're not going to see big breakdowns in the market until you see NVIDIA start to break down. AVGO, you still have an island cluster top, and that has not been taken out. So there's your island cluster top. Again, the blue line marks the top. Rallied up into that a little bit, but again, you haven't negated that as a good top. So, I think they could maybe go test it right up here, but daily close, as long as you don't get daily closes above there, then that remains the top, and you should head lower, all right, down to Right now, good support at 185.50. So I would be looking for a push down to 185.50. And then that's the bull should be sitting there. That's pretty solid support. It's very good support down there. Okay, I want to talk commodities real quick. DJP, this is a kind of a total commodity index. It includes oil and stuff, but DJP is making a very familiar pattern. This pattern right here, and I'm looking at the daily chart, is a rounding bottom. All right, as of right now, you can see there's your rounding bottom. If you're not familiar with that, you can look at Investopedia and stuff. But a rounding bottom is an accumulation pattern. It's a bullish pattern that shows that whatever stock or ETF or whatever is being accumulated over time, building large positions. And that's what this is. So essentially what we have is this is the COVID low, and you have a strong rally after COVID, and then you've got a kind of a corrective pattern, which is this rounding bottom, which is setting us up for another trend leg higher in commodities. Now, this rounding bottom can turn into what's called a cup and handle. You get the cup, which kind of looks like this, and then you kind of chop out and you kind of wedge out typically and make a handle. And then at that point, you break out to the upside. So that could be in play. We don't know until the future. But as of right now, it's a rounding bottom, which tells us we are going higher in commodities. So, if that plays out and you see commodities make another trend leg higher, you're going to have another wave of inflation. And the market's not expecting that. The market is not positioned for another wave of inflation. In fact, most people are positioned for inflation to continue to unwind. Although we are starting to see inflation tick up a little bit. I think we're at 3% or something like that year over year. So if we see commodities rise, that will work its way into consumer prices, and that's what they're using to track that CPI reading. So yeah, just something to take note of on that. And then, so when I drop over to the commodities, wheat, all right, this is the wheat ETN up again today, continuing higher. Again, we're above the 200-day now. So unless this fails soon, you're probably going to see wheat actually starting to rip higher and go, quite a bit higher. We've got reaction highs to watch, and there's obviously lots of key levels, but 648, there's a reaction high there on wheat. Wheat can go parabolic for sure. It does it often, so I like it. Wheat still looks good. Big bullish divergence on it. That's been building. We're moving higher. Everything looks good there. Corn continuing higher, moving up. And then soybeans, the other grain, it's up. It's this one's still kind of contained right now by the 200, but likely play a game of catch up if the other grains continue to rally. So I really like those grains. And then the ag input stocks, I've started to compile a list here. The two charts that look really clean to me are Mosaic, MOS, and NTR. So I'll go into those. Here's Mosaic. Again, bullish falling wedge on the daily chart. Big, huge bullish falling wedge. This is very similar to to what that commodity ETF looks like. You have that first leg higher and then a corrective phase. But that corrective phase is a bullish falling wedge. You have bullish divergence building on both RSI and PPO. And then on this one, you have a breakout and a backtest, couple backtests. Backtested for a while. I think it's free to run. It's at the 200 today, or just right there. So, it's got to break that. But once it does, I think it's free to run and start working its way up towards the measured target. Right now, I've got that set at 41.69. So this looks great. The chart's a really clean chart. This is one I want to be long, and I am long. I continue to add on, if it backtests more, I'm going to continue to add. So I'll add on tests of support or breaks of resistance. Right now, the 200-day is, probably going to act as resistance. So if we can break above it, I think that makes sense to probably add. The other thing is we do have earnings coming out on these. This one is coming out next week. We've got earnings. So you do have to keep that in mind. We'll see where this is at as we approach that day. NTR, also a great chart. Basically the same chart. You have a big uptrend line. You have a bullish falling wedge. You've got bullish divergence. You have a breakout. Never really fully back tested. So we'll see. You also have earnings coming tomorrow. Earnings are coming tomorrow. So this one also does look to me like it's bull flagging. You got this flagpole here, and then we've been flagging, and then an impulsive break. This is telling me it's going to make an impulsive break to the upside to continue that flagpole. So yeah, that looks like a good pattern as well. With earnings, it's hard to say, does it break on the earnings, or do they gap it back down to the bottom of this flag, or maybe do a back test of this? That's possible too. So I'd be looking to add to a long position if you gap down into some of these support levels. Or, you could obviously add if it gaps up too. We'll see. All right. But longer term, it looks good. I mean, I think if you gap down, I think you're going to rally and then you continue higher. Scott's Miracle-Gro SMG kind of looks like it's sitting at support right now. You can see I've got lots of reactions here on that support, and it looks like it's just kind of sitting right there at support. So I like it. It's also it is making a divergent low right here. You've kind of dipped down and making an equal low in price, but momentum is slightly higher, so it still looks okay. It's not as clean of a chart as NTR and MOS though, so keep that in mind. Interest rates rising a little bit today, but it's been pretty choppy the last few days. You can see we're chopping around, so we'll wait and see on that. I'm not making a call on interest rates yet. I do think they're going to rise, to be honest, but I don't know. I don't see anything in the charts that tells me right now they could fall and hit support. They could rally. I don't know. Really what I'd be looking for is any kind of move above this 5% line. That's your former area. That's your former cycle high. We get above there, the market should just be freaking out because that means you're seeing a spike in interest rates. Likely you're not going to get interest rates rising all the way up there unless you see a spike in inflation, and then all of a sudden there's a spike in inflation, and then the Fed's going to be forced to start maybe even hiking again, and then you will, and then interest rates could essentially spike. So one thing it maybe has to come before the other. So we'll just watch this. Intel's having a good day on buyout rumors. Again, this one had bullish divergence. It was definitely more of a bullish chart than any of them in terms of semiconductors. You've got a downtrend line right here. Let me kind of move this out. You got kind of gap fill, and it's dual resistance right up there around 2890 or so. Dual resistance. However, given the fact that Intel sold off so much, this one's been going down because they haven't really been participating in the AI trade, while all the others have been moving higher. You could break out from this downtrend. All right, so we'll watch that. You probably at minimum get a reaction there, but it could be a short-lived reaction then a breakout. Until you see it, there's no breakout, and that is resistance. SMCI is at the 200-day moving average, testing it from below. So that's resistance. And then you also have a downtrend line slightly above up here at about 65.21. And also you can see that was former support right there. So you've got dual resistance right overhead. So I think you could probably pop up there and then get sold into. I wouldn't see it going much higher than that level, 65. It's objective to short at the 200. It's objective to short up there at that dual resistance, which is another 20% up though. So, this thing moves quite a bit, so you could see a big gap up or just a push up and then get rejected. I wouldn't hold out And, I'm not shorting this one right now, but I'm definitely, if you're long, I don't know if I'd hold out for that final move because you might not get it. They might sellers might step in here at the 200. KRE, this is regional banks. Still looks okay as a short, although it's not really selling off. We're in an uptrend line. We have negative divergence. We got the breakdown in sell signal. It's been back testing. And lately, it's just been kind of treading water. Not going down, not going up. So we might backtest some more. That is possible. It could rally up and, hit that trend line again. So if you're short and you don't want to ride that out, you could always just, get out of it and maybe wait for either a backtest, which would be a very objective area to reestablish a short, or some sort of a big breakdown sell signal, a big red candle to help confirm that this thing's, heading lower. As of right now, they're still kind of holding it up. Natural gas looks like it's going to be running into some resistance here on this kind of reaction high level. It's about 21.59, and sure enough, almost there. Probably going to get there today. So sellers will likely be stepping in and selling at current levels up to that resistance level. Again, you don't always want to wait and hold out for the exact penny. You always want to kind of step in early. So natural gas looks like it's kind of done. It's up 7% today. And yeah. Okay, that's all I've got for today. So I'll get the video out, wrap up, and I'll catch you guys on the next one. Take care.